The Bandhan Small Cap Fund. There are two important things people ask a lot about this fund. One is what is our stock picking philosophy, and two, why do we have a huge number of stocks that we have? So let me first address that. The stock picking philosophy is a bit different from most of the funds. I think most funds are benchmark centric, and while we do look at the benchmark here in terms of sectors and segments, we are more absolute return thinking in the small cap fund. Our simple formula here is when we look at a stock, we try to imagine if the stock can double in 3 to 4 years, and if we feel that is likely, then we tend to buy it only then. Not to say that obviously it will work with every stock, but I think as a discipline, if we try this thought experiment of trying to buy stocks which can likely double in 3 to 4 years, that tends to give us a good framework for stock picking. In terms of number of stocks, there are many reasons why we have a lot of stocks. The first is liquidity, of course. These are small cap stocks, so the liquidity is constrained. Two is the business risk with these companies is also higher. So if a CEO leaves, if a big client leaves, these companies do get affected more than large caps. So we have to be conscious of the business risk. Third is we don't try to take a big macro bet. So we are there in every sector and segment which is there in the small cap index. We have a very experienced and wide coverage of universe which gives us a lot of ideas. So it facilitates us to be in most of the segments and sectors which are there in the small cap space. And the final reason why we have a lot of stocks is from a scalability angle. We are very ambitious about this fund. We think we can scale it up a lot. And when you get money, we want to be very objective about which is the best stock to buy. It may not be what we already own. So we don't mind adding a new stock because as long as the risk reward there is better than what we own, we are happy to add that stock to our portfolio. So these are the reasons why we tend to have a large number of stocks. Coming to the positioning of the fund today, we are, as I said, a bit absolute return focused, not very macro focused. So purely from a risk reward perspective where valuations look interesting versus the return we can make, we like real estate, we like textiles, we like a lot of financials which are trading very cheap because of asset quality issues. And in general, our view is that the domestic economy will do relatively well going forward after a bit of a slowdown over last 12 to 15 months. So we think that a lot of these financial stocks which are cheap are good attractive stocks. These are typically our overweights. We tend to avoid very expensive stocks. So some of the sectors like capital goods and consumer discretionary, we are underweight because from an absolute return perspective, they don't look very attractive.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.